Welcome to Module 2, Section 1 of your California Contractor License Exam Prep course. In this lesson, we're focusing on a critical decision you'll make as you prepare to operate legally and effectively as a licensed contractor in California, choosing the right business structure for your contracting company. This choice affects not only your taxes, but also your liability exposure, your ability to hire workers, your insurance requirements, and even how potential clients perceive your business. Many new contractors rush through this step or copy what a friend or colleague has done, only to find out later that they chose a structure that doesn't match their goals, costs them unnecessary money, or exposes them to risks they didn't anticipate. By the end of this lesson, you'll have a clear understanding of your options, how they differ, and the factors you need to weigh before you submit your CSLB application. When you apply for your California contractor's license, CSLB will require you to list a business entity type on your application. This determines how your business is legally organized and recognized by the state. The main structures available to contractors in California are sole proprietorships, partnerships, corporations, and limited liability companies, or LLCs. Each comes with advantages and drawbacks, and there is no single best choice for everyone. The right option depends on how you plan to operate, the level of risk you're willing to accept, and your long-term growth strategy. Let's start with the simplest and most common structure for small contractors, the sole proprietorship. A sole proprietorship is essentially just you doing business under your own name or a registered doing business as name. It's the easiest and cheapest structure to set up. You don't need to form a separate legal entity. You report all income and expenses on your personal tax return, and you can start quickly without extensive paperwork. However, this simplicity comes with a big downside. As a sole proprietor, there is no legal distinction between you and your business. If something goes wrong on a project, such as a client lawsuit, a major property damage claim, or unpaid business debts, you are personally liable. Your home, savings, and other assets can be at risk. Many small contractors begin as sole proprietors to keep costs low, but over time, they transition to a structure that provides stronger protection. Partnerships are similar to sole proprietorships, but involve two or more people owning the business together. Partnerships can be informal, but formalizing the arrangement through a written partnership agreement is highly recommended to avoid disputes over responsibilities and profit sharing. Like sole proprietors, general partners have unlimited personal liability, meaning their personal assets can be used to satisfy business obligations. There are limited partnership structures where liability is restricted for some partners, but these are less common in small construction businesses and usually involve outside investors. Next, let's look at corporations, specifically S corporations, which many contractors choose once they're ready to grow. A corporation is a separate legal entity from its owners. This means the company, not you personally, takes on most of the liability for its debts and obligations. If you're sued, generally only the assets of the corporation are at risk. Corporations can also provide tax benefits, allow you to raise capital more easily, and make it simpler to add or remove partners. However, corporations are more complex to set up and maintain. They require filing articles of incorporation with the California Secretary of State, adopting bylaws, holding shareholder meetings, keeping detailed records, and paying annual state fees. Some small contractors choose an S corporation election with the IRS to avoid double taxation while still benefiting from limited liability protection. The limited liability company, or LLC, is another popular choice for contractors. Like a corporation, it provides liability protection, meaning your personal assets are generally safe from business claims, as long as you follow the rules for keeping your finances separate. LLCs are more flexible than corporations in terms of management structure and tax treatment, making them attractive to small and medium-sized contractors. However, California imposes an annual franchise tax and additional fees based on revenue for LLCs, which can add up as your business grows. Also, CSLB rules currently require that LLCs carry higher bond amounts and meet specific insurance requirements compared to corporations or sole proprietors. Choosing the right business structure means weighing factors such as cost, liability protection, tax implications, and your plans for hiring employees or taking on larger projects in the future. If you plan to stay small, doing only a handful of projects a year, a sole proprietorship might make sense initially. But if you want to build a brand, hire workers, or take on substantial contracts, forming a corporation or LLC can help protect your personal assets and build credibility with clients and lenders. It's important to note that you can change your business structure later, but doing so after you're licensed may require filing additional paperwork with CSLB, changing your business license number, and updating your bonds and insurance. Making a well-informed choice from the start saves you time and trouble later. While you don't need a lawyer or accountant to choose a structure, consulting one before making a final decision can be extremely helpful. A tax professional can estimate your liability under different structures, and an attorney can help you understand how to set up the entity properly. Remember, CSLB will not approve your application until you've selected a business entity type, and you cannot contract under a name that misrepresents your structure. For example, you can't call yourself ABC Construction Inc. unless you're actually a registered corporation. In summary, the business structure you choose affects your taxes, your legal liability, and your long-term flexibility. Sole proprietorships are fast and inexpensive, but offer no personal protection. Partnerships share risk, but expose each partner personally. Corporations and LLCs provide liability protection and professional credibility, but require more setup, record keeping, and fees. The choice depends on your goals, risk tolerance, and growth plans. Take time to evaluate each option carefully, consult professionals if needed, and make sure your chosen structure matches the name you use in your CSLB application. Making the right decision here lays a strong foundation for a successful, sustainable contracting business.